Simran and Reema are partners sharing profits in the ratio of 3:2. Their capital as on 1st April was 2 lakh each. Okay, so both of them had contributed. Simran had contributed 2 lakh, Reema had contributed 2 lakhs, and their profit sharing ratio was 3:2. Whereas the current accounts had balances of 50,000 and 25,000 respectively. Interest on capital is to be allowed at 5% per annum. The net profit of the firm for the year ended 31st March was rupees 3 lakhs. Past journal entries for interest on capital and the distribution of profits. Also prepare profit and loss appropriation accounts. Okay, now this amount given over here, the current account balances of 50 lakhs and 25 lakhs. Do not get confused with these two amounts. Okay, they have nothing to do with the sum. It is not relevant to the sum. We'll just ignore this. Okay, let's begin with working notes. We first got to prepare the we first got to work out on our interest on capital. Let's find out our interest on capital first. Working notes. So we have two partners. One is Seema and the other one is Simran. Simran and the other partner is Reema. Okay, both of them had contributed a capital of 2 lakh. Simran had contributed 2 lakh, Reema had also contributed 2 lakhs. Now we've got to, there is no additions, no deletions, nothing, nobody withdrew, nobody had added any capital. Okay, interest on capital is allowed as at 5% according to the sum. So it's going to be 5 into 5 by 100 into 5 by 100. Since the number of months has not been given over here, we consider it to be 12 by 12 months. That's for one full year. You can write this or you can ignore this. So it's going to be, this is anyhow, it's 1. 10,000 is the interest on capital for both the partners Simran and Reema. Now that we found the interest on capital, our next step is to prepare the journal entries. But before preparing the journal entries, we'll first prepare the profit and loss appropriation account. If we prepare the profit and loss appropriation account, the journal entries become much more easier for us. Okay, so now working note is over. We'll prepare our profit and loss appropriation accounts. Debit, profit and loss appropriation account for the year ending whatever year it is, and then over here on the other side we'll write credit. Format is important. Particulars, amount rupees, particulars, amount rupees. Okay, our first thing is we'll first pass the entry for net profit. By net profit, it's already given in the sum that our net profit is rupees 3 lakhs. Now we'll come to the debit side. We've already done the working notes. We know how much is our interest on capital. So our next entry would be to interest on capital. Who are our two partners? First one is Simran. Now since the capitals are fixed, this interest on capital amount will go into the current account of the partners. Simran's current account and the other one is Reema's current account. Amounts are, both of them get an interest on capital of 10,000 rupees. So total interest on capital is 20,000. After this, now there's no other entry. So let's close the account. Before closing the account, we know that 3 lakhs is higher than 20,000. So the partners have definitely earned a profit. So over here we'll write 2 profits transferred to Simran's current account and Reema's current account. Okay, now we'll close the accounts. This would be 3 lakhs. The same 3 lakhs we are bringing it on our debit side as well. Now 3 lakhs minus 20,000 is 2,80,000. Now this 2,80,000 will be divided between the two partners Simran and Reema in the ratio of 3:2. It's already mentioned in the sum. Okay, so how much is this? 2,80,000 will be divided between the two partners Simran and Reema in the ratio of 3:2. So for Simran it is 2,80,000 into 3 out of 5 parts, 3 by 5. And for Reema it would be again 2,80,000 into 2 by 5. Okay, so now if we divide, Simran will be getting 1,68,000 and Reema will be getting 1,12,000. Okay, with this our profit and loss appropriation account gets completed. Now after profit and loss appropriation account, we are also asked to pass the journal entries. Okay, so let's prepare the journal entries. Now we can prepare the journal entries with the help of our profit and loss appropriation account. It becomes easier for us. So first, before that, format is important. This is our journal entry format. Okay, let's write journals. Journal entry, no, for the year ending. Date, particulars, LF, debit and credit. So our date would be 31st of March and the year. Okay, our first entry would be profit and loss appropriation account debit to Simran's current account and Reema's current account, and we'll write down the same amounts. Okay, what is our first entry? Profit and loss appropriation account debit to Simran's current account. How much is the amount? Rupees 10,000 to Reema's current account. Amount is again rupees 10,000. So totally we have rupees 20,000 in a profit and loss appropriation account. Now our narration would be being interest on capital transferred to partners' current accounts. Being interest on capital transferred to partners' current accounts. The next entry would again be on 31st March. What is the next entry? That would be this profits, right? Profit and loss appropriation account, debit to Simran's current account 1,68,000 and Reema's current account 1,12,000. Let's write down that entry. Profit and loss appropriation account, debit to Simran's current account. The amount is 1,68,000 to Reema's current account 1,12,000. So totally we have 2,80,000. Our narration would be being profit distributed between partners in 3:2 ratio. Being profits distributed between partners in 3:2 ratio, or you can write in profit sharing ratio, or we can stop even here, being profits distributed between partners. Okay, with this our journals also get completed.